The next one is a panel discussion. How can the next wave of Indian InsurTech companies become global winners? And we have with us Rajive Keshup. Rajiv. Rajiv is a partner at Cathay Innovation, part of Cathay Capital, a $6 billion asset under management global investment firm headquartered out of Paris. He's based in Southeast Asia and covers the India ecosystem activities for his organization. Cathay Innovation predominantly writes checks between $5 to $30 million Series A through C. We also have Albert Shyy. Albert is the MD of Eurazeo. He's the managing director at Eurazeo. And within the venture team over there, it's based out of Singapore. He leads a $200 million fund looking at early growth opportunities within India and Southeast Asia, focusing on InsurTech, obviously. MBA from UC Berkeley and UPenn bachelor's. We also have Roselyn Pereira. Roselyn, she's part of BNP Paribas. Welcome, Roselyn. She has over 2 decades of experience, having started her career in 2004 at Morgan Stanley in investment banking in Mumbai. She's worked at JM Financial, covering equity and debt markets, and also with Standard Chartered Bank. We also have with us over here Rahul Khanna. Rahul, he'll be the moderator for this session. He's the co-founder and managing partner for Trifecta Capital. Trifecta is a specialized financial platform, financing platform for new economy businesses across 3 verticals: venture debt, growth equity, and advisory. He was previously managing director at Canaan Partners, global venture capital firm, MBA from Kellogg. So welcome all 4 of you. Looking forward to your insights.
Thank you for joining us this afternoon, and thank you guys for hanging around. I know it's always tough to be the panel before lunch, so thank you for staying around. It's pretty amazing set of people on the panel today. We got some very diverse views from a global insurance company, a sector-focused fund, and then of course a larger private equity and venture capital fund. There's been a lot of talk about a funding winter over the last maybe year and a half. So I thought maybe we could start with just your perspective on where are we in the cycle, how are you feeling about investing in 2023 versus 2024?
Should I start? Okay. Thanks to everybody for having me. I think 2022 and 2023 have been super interesting as far as investing have been concerned. 2022, the theme was largely protect the portfolio, and 2023 has been a little bit of that, but also a lot of look for really interesting opportunities and really good buys, and be very cautious from a unit economics standpoint. I still think that there are some amazing opportunities and amazing companies being built and funded. I think just the velocity or the volume of that has fluctuated depending on which sector you're in. And so I'd say where are we in the funding cycle? I started to see things come back to life. You're starting to see more deals be announced. You're starting to see more rounds getting put together. But I do think it's with a healthy amount of caution in this environment versus probably over the last 24 months.
Albert, your views?
Hi everyone. Yeah, look, I think it's a great time actually to be investing into the market. As Rajiv said, valuations are obviously lower than they have been over the past few years. I think there's general understanding amongst entrepreneurs, investors in the ecosystem that people are being more conservative. Processes are taking longer. It allows funds, including ourselves, to take more time to really get comfortable with the asset, to know the teams better. And so, I think we're actually quite optimistic about the market. And I think some of the companies that, despite maybe the more general macro conditions, that are still growing well and demonstrating good financial performance, good economics in this time period. So we're closing actually 2 deals at the moment. Pipeline is looking good, and yeah, no, hopefully we'll, fingers crossed, we'll be able to continue to deploy more capital, including in India over the next 12 plus months as well.
Roselyn, just switching tracks a bit. There's been a lot of talk about digital transformation, AI, bots, blockchain, personalization. What are the themes that you think are gaining traction with insurers? And what should startups be focused on? Particularly, I think this topic is what will it take for Indian InsurTechs to sell into the global market? So what are some of the dominant themes that are catching insurers' mind space, and where are they open to partnering with young companies?
Sure, absolutely. So coming from an insurer's perspective, it's slightly different from a private equity perspective. We look more at the fundamental technical side as well. But having said that, most insurers, especially the large ones globally, while they've started the digitalization wave and they're looking to become as savvy users of AI and the other tech, it takes time to move a big ship, So if you're already big in size, what you're looking for is then to find a partner with whom you can collaborate, a partner who's much smaller, who's agile, a partner from whom you can learn. So as an insurer, it's not only a financial investment that we look to make, but we look for partners who can give us something that we can take back to our mothership. We can something new that we can bring to our customers, which we don't already have. And we are seeing a lot of that innovation happening in Asia using digitization. Of course, that's like the buzzword, AI, increasingly a lot of chatbots. It's a trend which global insurtechs are also doing, but I think Indian insurtechs, Asian insurtechs have been able to do it in a much more efficient manner, and that's what has been quite interesting for global insurers. I believe they should continue to do that.
Could you give us an example of maybe an investment you've done in this space?
So we are currently, in talks with one particular insurtech to complete it. Hopefully, it will be announced in the next couple of weeks. But having said that, it helps us understand the distribution side. It's largely on the distribution side. India is a country which is very different from the West. Each state is like a different country in itself, if you have to draw parallel. So being associated with an insurtech who has completely digitalized the process in a country where a large part is rural still today, where digitization is picking up, but the way they've managed to target such a large audience, a huge population size, successfully ramp up using just tech is something which we believe even we can learn from. So clearly, that's what excites us about this.
And would you take that to other parts of the world, or it's a very India-specific?
No, so actually we've invested in similar models in Southeast Asia as well. I think it's more of a developing market trend. It's an ability for us to take back to the global world as well, because we can reach multiple countries then. We know how to manage different customer behaviors globally as well. So we are doing a lot of cross-fertilization between our portfolio investments in Southeast Asia. Hopefully once we complete the India investment, they will be exchanging with them. We're planning to look at a similar model in LATAM as well. So we believe that just by interacting with each other, they could take away the best practices and grow, and benefit from it definitely.
So, we've obviously seen a dramatic rise in scale in the fintech ecosystem, payments, credit. There's lots of household names, PhonePe, Paytm, etc. How would you characterize the state of the insurtech ecosystem in India? Are we going to have a breakout moment in the next year, 2 years, 3 years? Where are we in terms of the building of scaled assets? Because we can think about a few names in insurtech that have become large and prominent, but definitely not as many. So from a lag effect standpoint, how far behind are we, and what are some of the things that are holding it back? And this is for anyone.
So I think India is catching up very fast on the global level. I wouldn't say that global insurtechs have taken leaps and bounds and moved ahead and India is way behind. I would say they're moving really fast. They learn very fast. They are following the big guys. Of course, the Boltecs of the world are at a different level. The Lemonades of the world are clearly models that Indians are also trying to replicate. But having said that, I don't think they're very far behind in the curve. We've managed to create innovative ideas in a much more efficient, cost-effective way. It's not been so much the case globally, which is why global insurtechs have not been able to turn as profitable as they should have probably been after being in operation for several years. That's an advantage probably that Indian InsurTechs have, that they can control costs better, they can learn from the guys who've already done it, they can, instead of experiencing the mistakes themselves, they can learn from the bigger guys and probably benefit and become profitable faster. The focus should be on having a business model which can help them make money in the future. It should always be profitable, so it should be able to sustain itself after a point in time. And that's a truly a model to.
Sorry, go ahead, Rajiv.
I was just going to say, just to add to that view, if we compare this sector to the fintech sector, I think both have similar horizontal problems and so are applicable globally, right? But the problem is the insurance or the InsurTech sector is solving a problem that you largely typically don't think about. When you think about the underbanked versus the underinsured, there's quite large gap in terms of who's got a bank account versus who's insured. The insurance obviously coverage is much less, and so the starting point is much earlier compared to where things start in the fintech sector. But also, you've got a situation where you typically buy insurance and are meant to not think about the product that you've just bought. It's meant to only come up when you have to do a claim, and versus a fintech where you're actively taking a loan or making a payment, which is something you transact with every day. And so the usage engagement is vastly different across sectors, which is why I think it'll take a little bit longer to have, so to speak, a moment. That being said, I think, to your earlier question, AI, bots will really start to level the playing field in terms of making insurance a lot more consumable and a lot more friendly to engage with, interact with, to make claims with in a quick and responsible manner. And so I think you start to see, as a result, AI and blockchain being able to close the gap in terms of the underbanked versus the underinsured, and really help the pain points of the insurance sector, which will then start to build it into a household name when you engage with your insurance policies in a way that is largely seamless without many clunky engagements and interactions along the way.
And
maybe just one more perspective from more of a, let's say, a valuation perspective, right, to your earlier question. I think, there's been Policy Bazaar, Digit Echo, kind of in the previous generation, so to speak, that have kind of achieved that, household name unicorn status. I think there's another maybe, half a dozen names. You have Turtlemint, Insurance Deco, Renewbuy, Servify. A few of these guys that are kind of in that, multi-hundred million to sub 1 billion category, and then you have obviously, kind of an even larger wave of guys that are, maybe in and around the 100 million range. And so, like, I think, it obviously takes time, but I think in the likelihood that we'll see 2 or 3 of these guys, break out in the next couple of years, I think is a pretty good chance of that, right? I mean, again, that's partially why we're pretty optimistic about the category here in India so far.
Roselyn, just from your perspective, is the buyer behavior in terms of insurance companies, is it very different between what you're seeing with Indian insurers versus insurers, say, in Southeast Asia or MENA or much more developed markets?
Well, as Rajiv said, the level of financial literacy is different in different parts of the world. So you can draw a parallel between the Asian markets. Several markets like Vietnam, Indonesia are quite close to India. India is ahead of several developing markets, other than that. But having said that, yes, customer behavior, customer understanding of the products, the complexity of the products available are different in different parts of the world. But having said that, you can still club developing markets together in a way because they're all trying to catch up with each other. And especially now with the spread of technology, awareness, etc., I think the next wave of catching up will be much faster than it was in the past. You will see customer behavior changing very fast. Customers' wants, changing, evolving very fast. And so it's necessary for insurers, even in developed markets, to be aware of what's happening. Today, you cannot be isolating yourself to one market. If you are a global player, you have to understand different behaviors in different markets and be able to react to the changes of your customers' needs. And that's where, these InsurTechs in different markets guide us to take back things that we can replicate elsewhere and provide things that our customers have not yet anticipated maybe today, but they will be waiting for in the near future. So I think that's where it brings a big difference to us incumbent insurers.
Rajive, you've obviously looked at kind of InsurTech globally as well, and there's been many household names built, Oscar, Metromile, Hippo, etc. Has that been an opportunity for startups to kind of tag along? Has there been a slipstream of opportunity where, as these companies got built, there were startups that went in and said, look, I can do parts of the solution? Or do you feel like, now that there are these success stories of kind of new age companies, that the large incumbent insurers are saying, I need to level the playing field, so where can I go find an application or a solution?
Yeah, I think you're seeing both, right? So on one side, I think you are seeing your large insurance players or InsurTech players sort of emerge, and that by itself has created a whole ecosystem or sub-ecosystem of new age players that are solving bits and pieces of the solution better than their InsurTech did. I could give you a few examples with businesses that have spurned out of Cover Genius and Boltech that are now solving pieces of the problem. We've seen chatbots largely focused on insurance. We've seen folks make claim optimization a lot better for auto insurance using drones to manually get rid of a lot of the people in the process. And so I think that's absolutely right. But at the same time, I do believe that we sort of live in this arc, right, of innovation. And within the arc of innovation, a company will break out because they truly believe that they can out-innovate an incumbent. And they can do so because they're younger, they're more nimble, they don't typically come with the baggage of a particular sector, they don't come with legacy customers, and can reinvent a process. But over time, if you've spent too much time in doing so, the incumbent typically catches up, right? And so this we were chatting about this in a room earlier, but this sort of race in terms of innovation goes up, but also comes down, and it's sort of reflected in your terminal value or your end usage multiples when companies look to exit. And so it's this really interesting period of catching a company as they're just starting to grow, but making sure they have other sustainable moats or other use case applications that continue to propel its growth. Because if they don't or aren't able to maintain that over time, in the long term, they end up looking like the incumbents that they were trying to disrupt in the first place. And so we sort of see on the global scale both of those themes starting to play out, more so in the fintech sector, but I'm sure the insurance sector is not far behind.
So, often large technology shifts, regulations, new compliance requirements force a change of vendors, of behavior. If you go back 20 years, Y2K was kind of a breakout moment for Indian services companies and software companies. Is the adoption of AI in businesses a breakout opportunity for Indian startups? Because, there's always this view that the journey from where we are today to being AI enabled is a combination of product and service. And India has that advantage of being able to do the heavy lifting on service, but also have great product. So any thoughts on whether this is that interesting window that we can climb through?
Yeah, I mean, I have to say, I think perhaps rather than India having a specific advantage, it's more, it'll be almost like table stakes for Indian startups that want to be competitive globally, to be, incorporating, these tools and kind of these insights, right? And I think, obviously there are structural advantages of being based in India, just in terms of the data sets and the ability to collect, that type of data, perhaps in a more structured manner. I mean, India, I think compared to any other country, has a lot of advantages which fintech companies have taken advantage, right, in terms of UPI and in terms of having digitization or I think a lot of consumer level data, and so I think that's is something that can certainly be an advantage but I think they'll need that in order to really just be competitive in the next generation of companies.
Rajive?
Yeah, I don't view, and maybe so I lead AI for our firm, and I don't view AI as a massive game changer, which is hilarious. I kind of view AI as a great enabler of productivity, but it is just that. I think AI, as Albert mentioned, being table stakes, really spurns off a couple of other sectors that are way more interesting from an investment standpoint and a growth standpoint. The entire data stack changes, how you build an LLM changes, who owns the data, how you transfer data, how you analyze all of the data that sort of comes out of that becomes a lot more meaningful. I think India's role there is a lot less in the productivity building, but a lot more in the underlying architecture that can change. I think hardware is sort of spoken for between some of the large hardware giants. I think the LLMs are largely open and they're really hard to build, cost a lot of capital, which Indian startups typically don't have versus their counterparts abroad. And so I think really the area to play is in the data architecture, and you're starting to see a ton of work sort of being done out of that. In terms of AI, I think it's going, as Albert mentioned, I completely agree. It's going to be table stakes. It's going to be there's no real competitive advantage actually if you don't adopt AI in your front, middle, and back end in some way, shape, or form. You tend to risk being completely left behind from a customer experience or a business productivity standpoint.
Roselyn, you've lived in the banking world and the insurance world. A senior banker said to me last year, the only way to survive in fintech is three things. Either you do distribution for a bank, either you sell technology to a bank, or go get regulated like a bank or an NBFC. What does that mean for InsurTechs that are looking at these different business models and saying, what do we want to be when we grow up? Should we focus on distribution? Should we focus on selling to insurance companies? Or try and become manufacturers, quasi-manufacturers, which comes with its own challenges. So if you would imagine InsurTech following behind, do you see startups sort of having to then pick one of those three, and where do you think the most value lies?
Well, unfortunately, there's no one-size-fits-all model. So what's right for one may not be right for another. It would be very case-specific. Having said that, doing too much at the same time will always confuse you. So be clear in your thought process. If you have started your path on building technology related to enabling either banking or insurance distribution or AI, because as he said, data is very important in these sectors. As a banker, as an insurer, you need to know what your customer wants, and it's data that gives you this information. So if you decide to become an enabler to an incumbent insurer or a bank by virtue of your technology, focus on that area. Becoming a regulated entity is not everyone's cup of tea because it needs a lot of capital, it needs a lot of focus on following regulations, meeting the requirements that the regulator places before you. As an InsurTech, you're still finding your feet, right? So it's too early in the day if you start taking on the regulatory burden as well. So I would suggest what differentiates you from the big players is the fact that you're able to be agile, you're able to move according to your customers' needs, you're able to innovate. So it's good to obviously move down the path and grow and probably become regulated in the long run. That's your next stage. But to start with, I would say be more focused on the product, be more focused on your segment that you're today focusing on, and try to excel in that. I would say it's a step-by-step process. You have to find if getting regulated is for you or not. It's not for everyone.
And Albert, from your perspective, are you comfortable just investing in an insurance distribution business? Does that give you the kind of venture return that you're excited about?
I'll say yes and no. Because I think distribution is the way that most startups will approach it, right? I mean, it's like almost any other industry, right? I mean, that's kind of where the digitalization and the efficiency comes into play. And I think, frankly, that's also how you can fundraise, right? Because then you can show that you can start to generate scale, and know that the market potential is is big enough and interesting enough. At the same time, I know, as we all know, distribution can be tough on margins. The economics can be challenging when you have to work with partners in different ways. And so I think we're starting to see, in Southeast Asia as well, companies that started in distribution, grew to a certain level, raised along the way, and now are big enough to convince regulators, investors, and insurance partners that they can start to do more, right? Whether that's underwriting, whether that's maybe handling more of the operational processes. And so I think ultimately we do see value in kind of a more integrated model where you can generate value across the chain. And so I think a pure distribution model, there's still value there, but I think you tend to be able to, the next generation, you tend to be able to capture more of that if you can do more than just pure distribution. But you need to get to a certain level to do that.
And Rajive, you've not done, as far as I know, any direct pure tech investments in InsurTech in India as yet. Would you be comfortable writing a check to a tech company just focused on selling to Indian insurers?
Yeah, 100%. I think the macros for the Indian insurance market are incredibly encouraging, incredibly promising. I don't think they grow at the speed we predict. Adoption takes a lot longer than we typically would like to believe. But I do believe that 20, 30 years from now, we have a large population that is that's relatively insured or touches insurance in some way, shape, or form, either embedded or direct. And so as a result, companies that are serving this sector will stand to sort of rise on that tide. So 100% would do that.
Okay. Maybe an unfair question to ask, but each of you, do you think that there is some attribute of Indian startups, you talked about operating efficiency, cost, things like that, that gives us some unfair advantage? We talk about SaaS more broadly and Indian companies trying to build product for the US market. We've seen it in a few areas like marketing automation, maybe low-hanging fruit, not necessarily large enterprise sales. Do you think there's a certain edge for Indian InsurTech players to get into more developed markets? Where would you guide them to focus if they said, I want to go beyond India? Which are the dominant markets that Indian InsurTechs could go to?
Yeah, so actually, I think most InsurTechs in India rightfully are focusing on the domestic market. I mean, there's just so much to do here. The market's still very untapped. So blah, blah, blah. There are companies actually even today that are already taking their business model globally, right? And I think we have two examples that we can give. One is, and we're not investors in either of these, so this is purely just an observation on the market. One is Roselyn, a company that just went public, de-SPAC'd on
That's right.
In New York. Their business model started in India, but they made some acquisitions in the US, in the UK. They have business, a sizable business in both of those markets. The second is a company called Servify, which again started in India, now has business on the extended warranty space in the US and I believe also some other markets in Europe as well. And so I think it's definitely possible to do that, right? And again, it depends on partly what's the management's focus areas. I think you can also argue these businesses could just stay in India and continue to build and grow here. But there's various reasons that whether it's for scale or maybe just opportunistically. I think they can be competitive overseas even today.
Okay.
Just 2 points on that. So to your second question around can they go global, which is sort of the theme. I don't, unlike their SaaS counterparts, I don't think Indian founders necessarily need to go all the way to North America to really find great traction. I actually think North America's, from an insurance standpoint, is largely broken across multiple segments, and so there's probably better places to land. The GCC, Southeast Asia, Eastern Europe, and to a certain extent Western Europe present amazing opportunities that are largely unpenetrated, especially for the former. And because insurance is largely a horizontal problem as opposed to a very population-specific problem in most cases, you could sort of get away with running 80 or 90% of what worked in one geography and shipping that to others because you're largely dealing with the same sectors and end use cases. So that's one. In terms of an undue advantage or what founders have, I think there's a level of jugaad here in India that you just cannot find with founders in any other parts of the world. We've invested across the world. We've met founders across the world, and so our N or our sample size is very large. And what we find in India is actually very, very similar to what we find in Vietnam, which is a set of founders that are willing to do whatever it takes, willing to build whatever needs to be built, talk to whoever they need to talk to, work 26 hours a day in order to make sure that they get across the line, because failure is not an option. And I think that just that level of survivorness and grittiness and skill set is really hard to replicate, and will stand the population of founders well in a global environment.
Yeah, maybe to add to what Rajive is saying, there is a natural advantage that India has of a large, educated, well-qualified workforce. Like, it's difficult to find well-qualified data scientists in the developed part of the world. They are really coveted, they're really, very expensive to get. But in India, you can develop a team, there are youngsters available, well-qualified engineers, etc. So it's easier to have access to this talent pool to create more efficient businesses, as I said earlier. So, even from an operational cost perspective, there are quite efficient businesses which are not so possible, say, in the US, if you start to set up something like that. So there are advantages which, India has. As Rajiv said, it's not necessary to be physically placed in the US. You can develop your product here, you can make it competitive with the passion that the Indian entrepreneurs have. They're ready to learn, they're ready to create products which are competitive. I think you can then target any market in the world. The developed markets are as available to a good quality product as the developing markets. So.
Super. And Albert, thanks for the plug on Servify. We've been involved in that company for 4 years now, and we continue to invest in Servify. And I think the lesson learned from working with somebody like Apple in India, who's a very challenging customer, once you've done that well in India, you can piggyback to, say, what they're doing in the US now. So I do think that if you can get high quality multinational clients in India, you can take some of that to other markets. I don't know how much time we have. Anyone on the time check side? Okay, great. So maybe we'll just leave it for questions now. So please, if you can just identify yourself and then address the question to anybody on the panel. What time is lunch? Is that the first question? Anyone? No questions? Going once? Going twice? Okay, I have one question then. So all of us...
How globally you are looking at the InsurTech industry, which is grooming in the India? How you can say, means how the globally we are looking at in form of an investment in the sector? I think few people have added that, but if I want to see it especially in form of other countries like China, Philippines, Vietnam, they also have an IT sector with it, they are developing it. Europe also have a strong base of it, especially Europe, we have a tough competition. So how you are looking into India, what type of investment is proposed to come in the sector particularly, especially in the startups? Because being the startup, this is what we are also looking at. Because now we have a lot of scope to integrate ML, we have a lot of scope to integrate AI in our InsurTech abilities, for which definitely the Indian startups are looking for fund.
Yeah, so maybe I'll go first. I'll try and answer your question in a way that is hugely personal, right? So traditionally, as a firm, we've been heavily invested in Europe and in China. Then over the last 4 or 5 years, we added North America, and in the last 3 years, we added Southeast Asia. And I've as part of my role in the firm, I've been fighting to spend a lot more time in India, right? We now have what will end up being somewhere between $1 and $1.2 billion global fund, of which 50% or 40% will be invested in Asia, and the lion's share of that will be invested in Southeast Asia and India. And if you ask me personally, the lion's share of that will be invested in India. If I look at sectors, we love sectors where one of two things are happening. Either one, the sector is so underserved that we are compelled to spend more time because we believe over the next 10 years the dynamics will be completely different. And the two on the top for me are digital healthcare and insurance. And then the other businesses that we like are ones where they can start here, but they can sell everywhere. And then the ones that are like that for me are also insurance, but then SaaS and data, right? And so for us, we're going to spend a significant amount of our time, fund, and resources focused on the Indian InsurTech sector as part of our broader India investment mandate. So that I can only answer the question where we're putting our money, but hopefully that gives you a sense of maybe where the rest of the world is thinking.
Great. Maybe just quickly. So Eurazeo, we're pretty new to India. We're in the process of closing our first investments across all of our funds in India right now. So again, I think there's a lot of learning and catching up to do here. But no, we're definitely very very bullish about the market here. I think it's for us, especially on the consumer side, within InsurTech. I mean, again, it's everyone here knows the statistics and the penetration rates and everything. But I think that's where we see really a lot of market opportunity.
Maybe to conclude, all I need to say is that today, India not being a part of the investment portfolio of any large firm, that's not possible. India is clearly being perceived as one of the top 5 nations of the world, potentially a 5 trillion economy very soon, etc. So clearly, no one can afford to ignore India. It's definitely on the radar of every investor who's a serious investor. But also a lot will depend on how Indian InsurTechs manifest themselves in the next few years. The quality of business, the way they conduct themselves will have a big impact as well. So now it's entirely on the Indian InsurTechs as well to sort of welcome this investment that's coming in and give them more confidence, I would say.
Super. Should we ask him for one more question? You guys okay with that? One last question. Make it quick, please.
Great, thank you. My name is Harin Sudaria. I am a domain-driven co-founder for one of the InsurTech named iGenie. So maybe just a very simple question. Where will you put your money on? Whether it would be domain-driven InsurTechs or pure tech-driven InsurTechs? Because since insurance is a very, very heavy domain-driven business, right? Until and unless you really understand domain, it is very difficult to give a proper solution, which is, say, in the tech side. Otherwise, tech has been in India since decades, but still the kind of innovation or the kind of things which we really need in the insurance sector is just coming in the last, maybe say 5 years or so. So how would you put your money, whether it will be pure domain come the tech or pure tech is also pretty okay?
Where's your money going, Eurazeo?
As an insurer, I'll answer this question, and my answer may be different from an investor. So as an insurer, of course, we have products based on our 50 years of experience. As Cardif, we have products where we've had better experience in terms of customer satisfaction, claims, impact, etc. So yes, we have preferred domains that we like more than the others. And that is definitely one of the driving factors in investments driven by insurers, at least. We don't purely go by, what's happening in the financial world, etc. But part of it is also, as I said, we have to take it back to our other customers. We look for things that we can replicate in other regions as well and do better than what we were doing. So yes, while tech is important, we do a lot of tech innovation on our side also. I mean, every incumbent insurer is already digitalizing themselves, using AI, chatbots, and everything else under the sun. But where we look to InsurTechs is them doing what we like in a better way than us, you know. So yes, domain-driven definitely is the preference, I would say.
Yeah, I mean, look, I think we like both actually. It really depends on just the performance of the business model, right? But I think our approach has been generally to look for platform plays first, tech probably, a little bit more on the tech side then.
Right.
And then, once we have hopefully some exposure there to then look more specifically at certain domains where we think maybe the industry dynamics are more interesting or the market's more attractive.
Great. Okay.
Super.
Thank you.
I think we're out of time. Please join me in thanking the panel.
Thank you, guys.